Hello everyone and welcome back to the Deep Dive. I hope you're having a fantastic week and are ready for another look at the companies really reshaping the future of global conflict and technology. Today we are breaking down one of the most compelling and I think rapidly evolving stories in the entire defense sector, AeroVironment, ticker AVAV. Now this is the world leader in small unmanned aircraft systems, or SUAS, and crucially loitering munitions. But the central question we're here to tackle today is, it's profound. And the scale of the strategic pivot is just immense. AeroVironment is transitioning from a high-quality, sort of niche hardware supplier to a fully diversified defense prime, and they did this after executing the massive, $4.1 billion acquisition of BlueHalo. So is this bold move the definitive blueprint for the wonderful company of the future, dominating the new architecture of warfare? Or does the sheer complexity and integration risk of this acquisition introduce just too many hidden cracks that the long-term investor has to account for? That is the mission of this deep dive.
That is a massive question. I mean, it's one that really defines the modern defense landscape, and the stakes, well, they could not be higher given the geopolitical backdrop. And before we get into the details of AVAV's transformation, just a quick note for everyone watching and listening.
Yeah, for those of you who want to act on these investing ideas, having a professional-grade platform that can handle complex sectors like defense tech is, well, it's key. Options trading, access to specific data, all of it. We use interactive brokers, and we've partnered with them to get our listeners a stock bonus when you sign up and fund an account.
So you get a stock bonus to get started, and you support the deep dive at the same time. That link is right there in the description below.
That's right. And of course, if you find value in this kind of in-depth discussion, the best way to let us know and to ensure you don't miss the next one is to, subscribe and hit that like button. It truly helps the channel grow and reach more curious investors.
Yeah.
And if you have any questions, any questions at all, about the future of AVAV or the implications of drone warfare, please drop them in the comments. We'll be sure to address them.
Perfect. Now let's get into it. The shift happening at AeroVironment it's tectonic. It's moving them from a relatively small component supplier to a critical systems integrator. So we absolutely have to start with pillar number one. Business quality, the crucial shift to lethality and systems integration.
Okay, let's unpack this core thesis because it's so important. For years, for decades, defense spending was dominated by the doctrine of the few and the expensive. Think billion-dollar manned fighter jets, aircraft carriers, massive main battle tanks.
The big, exquisite platforms.
Exactly. But the modern battlefield, and what we're seeing so acutely in Ukraine and in strategic planning for the Indo-Pacific, it mandates a pivot to the many and the smart. It relies on distributed autonomy and, attritable mass.
And I would argue AVAV is right at the vanguard of that shift.
No question.
That's absolutely the right framing. When we analyze their core business, the historical evolution is just striking. They started in the Uncrewed Systems segment, or USS.
Okay.
These are the famous small reconnaissance drones that everyone knows. The Raven, the Puma, and the Wasp. These systems were primarily focused on intelligence, surveillance, and reconnaissance, or ISR.
And that was a highly respected line of business for sure, but it was ultimately selling durable goods, wasn't it?
Exactly. It was a stable model, very high quality, but inherently slow growth. You sell the hardware platform, you sell the spare parts, the wings, the batteries, and then you wait.
You wait maybe 5 to 10 years for the military to approve the next major refresh or, some big upgrade cycle.
Right. The revenue profile was, well, it was lumpy and predictable, but not high growth.
That whole model fundamentally changes when they introduce the lethality layer.
Oh.
This is the moment, in my opinion, where they truly transform the business quality.
Oh.
They go from being a durable goods seller to something much more.
Absolutely. The introduction of the Loitering Munition Systems, or LMS, completely re-architects the revenue dynamic. It's a fundamental shift.
How so?
Instead of selling a drone that lasts 5 years, they are now selling a high-tech consumable. This is the classic razor and blade model applied to defense.
But in this case, the blade is a precision-guided, often anti-armor, missile designed to be used exactly once.
Exactly. And that transition to a consumable product is just critical for investors to understand because it introduces this high-velocity, recurring revenue dynamic.
A dynamic that correlates directly with global military conflict intensity.
And the urgency of training exercises. The more tension there is, the more of these they need, both for the battlefield and just to stay ready.
And the market is absolutely rewarding that acceleration. The LMS segment has just become a hyper-growth engine for them.
It's incredible. If we look at the results for the fourth quarter of fiscal year 2025 alone, We saw an 87% year-over-year revenue increase in that one segment.
87%.
This isn't just, a little bit of organic growth. This is explosive, high-stakes acceleration driven by real global demand.
And that growth is overwhelmingly fueled by the Switchblade family. So let's spend some time here. Let's look at the two iterations and really understand their different roles on the battlefield.
Okay, so the Switchblade 300 was the original system. It's often described as an anti-personnel flying shotgun.
Flying shotgun, I like that.
It's designed for surgical strikes against soft targets. It gives a small unit the ability to engage targets beyond their line of sight, quickly and with incredible precision.
But the Switchblade 300 was also the subject of some pretty intense battlefield scrutiny and adaptation, right? Especially with feedback coming directly from Ukraine. What did we learn from its early deployment there?
We learned two vital things that forced AVAV to run that Red Queen race almost immediately.
Okay, what's the first?
First, the company had to rapidly develop the Block 20 variant. This new block focuses on hardening the communication link and the command software against sophisticated electronic warfare, or EW.
So basically making it tougher to jam.
Exactly. And second, there were definite critiques that the early versions had, let's say, limited kinetic effects against serious armored vehicles.
And they were sometimes susceptible to jamming.
Right, especially when you compare them to the rapid proliferation of these super cheap commercial drones that were being adapted for combat.
That's a crucial point. When you compare the, $500 hobbyist FPV drone to the Switchblade 300, which can cost tens of thousands of dollars.
60,000, maybe more.
AVAV has to defend that price premium constantly. So what does the Switchblade offer that the military absolutely needs that a hobby drone just can't provide?
It comes down to two things: security and reliability. I mean, while those cheaper commercial drones are effective, they lack core military necessities.
Like encrypted communication.
Encrypted comms, which means adversaries can't easily listen in on the feed or the command links. They also have robust autonomous terminal guidance and, crucially, a wave-off capability.
Ah, the ability to abort.
You can abort the mission if the target isn't confirmed or if circumstances change on the ground, something that's virtually impossible with a commercial drone that's been hacked for a one-way attack.
So you're buying accountability.
You're buying a level of sophistication and accountability that the military demands and is willing to pay a premium for.
However, the real inflection point, the system that truly catapults AVAV into the big leagues and validates this whole anti-armor thesis, is the Switchblade 600.
That is the definitive shift. It's not an incremental improvement. It's a step change in capability. The Switchblade 600 carries a Javelin-class warhead.
A Javelin-class warhead.
Meaning it possesses the kinetic energy necessary to take out a main battle tank or other heavily protected targets. It is no longer just a surgical anti-personnel tool.
It's a serious, long-range tank killer.
A tank killer that fits in a backpack.
And this capability is exactly why it was selected for the first tranche of the U.S. Department of Defense's massive Replicator initiative. So for our listeners, why is Replicator so historically significant, and what does this selection actually signal to the market?
Okay, so Replicator is the DoD's mandate to field thousands, and I mean thousands, of autonomous systems very quickly within 18 to 24 months. The whole goal is to counter China's mass production advantage.
This sounds almost like a Cold War-era procurement push.
It's very reminiscent of that. It prioritizes velocity over, incremental perfection. Yep. They want good enough systems in the field now.
And the selection of the Switchblade 600.
It signals that it is transitioning away from being an experimental technology and moving decisively toward program of record status.
And what's that program called?
It's under the Low Altitude Stalking and Strike Ordnance, or ALASO program.
And that move from experimental to program of record, that guarantees multi-year budgetary support, that's goals for any defense contractors, isn't it?
It's everything. And it creates what we call scale economy shared. The DoD's high-volume demand through Replicator doesn't just benefit AVAV's top line.
It forces them to get better.
It forces them to ramp up manufacturing velocity and efficiency to meet that demand. That volume naturally drives down the unit cost, which is then passed back to the customer.
But it also simultaneously improves manufacturing reliability.
And reduces the chance of a competitor ever catching up.
So the high-volume demand from the customer becomes this self-reinforcing competitive moat, a velocity moat as you called it. The competitors simply can't match that manufacturing tempo or the resulting cost structure.
Precisely. They are building distance through sheer execution speed.
Now, while we're focusing on the high-growth loitering munitions, We can't ignore the legacy business, right? The uncrewed system segment.
We can't. Even if its growth is more mature, around 9% year-over-year in Q4 FY 2025, it serves as the essential network infrastructure for everything else.
It's the installed base. The Pumas and Ravens are just ubiquitous across NATO forces. So why is this older, slower segment still so strategically valuable?
Because it creates enormous cognitive lock-in. We're talking about high switching costs driven by military personnel training.
Okay, walk us through what that cognitive lock-in actually means, not just in terms of personnel, but in terms of the real costs to the military.
Okay, so if a soldier is trained on the ground control station, the GCS, for a Puma surveillance drone, they can then seamlessly operate a Switchblade loitering munition.
Or the new P550.
Or the new P550 UAS. The U.S. Army and indeed many NATO allies have invested substantial sunk costs in certifying, training, and maintaining operational readiness for thousands of personnel on this single standardized AVAV ecosystem.
So if the Army were to decide, hey, we're going to switch to a competing GCS, say one provided by Anduril or one of the traditional primes, what does that actually entail for their budget and their readiness?
It's prohibitive. I mean, it's almost unthinkable. It means completely overhauling training pipelines, creating new manuals, certifying new simulators.
And potentially delaying deployment of critical capabilities.
We're talking about not just the cost of new hardware, but the immense non-recurring cost of retraining an estimated 10,000 or more highly skilled soldiers.
Wow.
Field commanders prioritize interoperability and readiness above almost all else, which makes switching incredibly risky and incredibly costly. This GCS standardization is a massive, almost impenetrable barrier to entry.
And AVAV is actively working to close that entire kill chain within their own proprietary vendor ecosystem. So tell us about the P550 UAS and how that fits into this lock-in strategy.
The P550 is designed to be the AI-enabled sensor that identifies the target with high confidence. It's the eyes. It then seamlessly tasks the Switchblade, which is the shooter, all within one vendor's closed loop. This ensures data integrity and interoperability without the customer having to piece together incompatible systems from 5 different suppliers.
So it just reduces the friction of that whole sensor-to-shooter process.
Exactly. They offer a unified solution that streamlines the operational process, which is a huge selling point for military buyers looking to reduce complexity under the stress of combat.
Okay, one last piece of the core business. We should briefly touch on MacCready Works.
Right. The company's internal R&D segment, named after its founder, Dr. Paul MacCready.
I think of this as their innovation incubator. It's like their engine of anti-fragility.
It is precisely that. It's where they pursue high-risk, cutting-edge technologies like high-altitude pseudo-satellites or HAPS.
What are those?
Think of them as ultra-long endurance comms relays that fly in the stratosphere for months at a time. Very advanced stuff.
And crucially, they use customer research dollars for this.
That's the key. They use CRED, so they're often getting paid by the DoD to develop the next generation of high-risk tech. This ensures a continuous product pipeline without draining their internal balance sheet, insulating them from the inherent risks of deep tech development.
So they're getting paid to innovate. That's a very strong model.
It is.
That sets the stage beautifully for pillar number 2, the BlueHalo metamorphosis.
Yeah.
Because this $4.1 billion acquisition, it's not just about expanding scale. This is a fundamental re-architecting of the entire company structure and its ambition.
It truly is. This deal instantly graduates AeroVironment from a specialized component vendor to a multi-domain prime contractor. They have solved their scale problem instantly.
Instantly.
Transforming into an entity with a pro forma revenue profile that's approaching $2 billion, they have successfully moved up the defense hierarchy in one single move.
And this was a highly calculated move, wasn't it? I mean, BlueHalo wasn't just some random defense company. It was a strategically assembled roll-up of several high-tech firms specializing in space, directed energy, and cyber.
Precisely. Let's start with the first major pillar BlueHalo brings to the table, space technologies. Why is controlling the high ground now so essential to AVAV's defense thesis?
I see this as their resilience layer.
It is. BlueHalo brought in key programs like the Satellite Communication Augmentation Resource Program.
It's a SCAR program.
The SCAR program for the U.S. Space Force.
Yes.
This is a crucial multi-billion-dollar opportunity where they are replacing aging, mechanically cumbersome satellite dishes with advanced, resilient phased array antennas.
Which they call Badger.
Their product name is Badger, yes.
Now, this sounds very technical. So why does this translate into sticky, durable, long-term revenue for AVAV? What's the lock-in here?
Well, the military is deeply concerned about what happens when traditional satellite communications are targeted or jammed in a near-peer conflict.
Right, yeah.
Phased array antennas are electronically steerable. They allow them to rapidly shift beams and focus signals, which makes them highly resistant to jamming, spoofing, and even kinetic attacks.
Okay, so by owning that ground link infrastructure for the fastest growing branch of the U.S. military, the Space Force,
They embed themselves into the most strategic and foundational layer of national defense. This revenue stream is incredibly durable, and it provides a perfect balance to the inherent volatility of, say, consumable munition orders.
that's robust diversification. Okay, the second pillar is directed energy, which you've called the most ingenious element of this whole deal, the strategic hedge.
It is an elegant business model. It's designed to capture value regardless of which way the battlefield trend goes.
How so?
BlueHalo developed the LOC-UST laser weapon system, which provides sophisticated Counter-UAS or CUAS capability. These systems are designed to detect, track, and destroy incoming enemy drones using powerful lasers.
Okay, so let's put this together in terms of AVAV's entire conflict portfolio.
Think about the combined entity. On one hand, AVAV sells the offensive systems, the Switchblade drones, which are proliferating globally. And simultaneously, they now sell the defensive systems, the LOC-UAS, which are required to destroy enemy drones. They are positioned to profit from both the proliferation of drone threats and the urgent need to mitigate them.
So whether the drone warfare trend accelerates in terms of cheap threats from adversaries or our own use of high-end precision systems.
AVAV captures value on both sides. It hedges their core drone business against the risk of its own technological defeat.
It's a perfect strategic hedge. If the use of cheap, commercial off-the-shelf, or COTESs, drones increases, the demand for high-end CUAS laser defense increases exponentially.
And if the need for our own precision, long-range strike increases, Switchblade demand goes up. They capture the entire conflict spectrum. It's brilliant.
Okay, the third pillar BlueHalo brings is crucial for their core business, cyber and electronic warfare capabilities. This directly addresses that primary technical weakness we discussed earlier, the susceptibility of small drones to jamming and spoofing.
This is where the synergy is most apparent and I think most powerful. By integrating BlueHalo's deep expertise in RF and cyber defense technology directly into AVAV's airframes.
Into the GCS and the communication links.
The combined entity can produce genuinely hardened drones. These are systems designed from the ground up to survive where cheaper CO-test drones fail, especially when faced with sophisticated state-level jamming like that employed by Russia.
And that integration is non-trivial. It's not just bolting on a new box.
Not at all. It boosts the inherent quality and survivability of the core Switchblade and Puma products, which is how they justify that premium price.
Okay, so the unifying vision for all this technology is what they call the AV Halo network effect. This isn't just about combining revenues. It's about creating a unified, AI-powered software layer that connects everything.
The AV Halo is the mission-ready software suite that provides true system of systems lock-in. We can walk through the full vision here.
Let's do that.
Okay, a Puma drone identifies a target deep behind enemy lines. That data needs to be transmitted quickly and securely. So it's immediately sent via a BlueHalo optical laser link, leveraging that Spacecom's layer back to the command center. BlueHalo's proprietary AI instantly classifies the threat with high fidelity, and then a Switchblade engages, providing positive terminal guidance all the way to the target.
So the entire kill chain, from sensor to shooter, is now proprietary to the combined AVAV entity.
Which means it's exponentially more valuable than the individual parts. It creates an ecosystem that is almost impossible to rip out because the different components, the drone, the space comms, the AI targeting, the laser defense, they're all mutually reliant on each other.
In the structural transformation, it dramatically improves revenue quality and visibility, doesn't it? We're seeing a fundamental shift from reliance on discretionary defense spending,
Which can be cut annually.
to reliance on established programs of record.
And programs of record are notoriously difficult to cancel once they're embedded in the budget.
Yeah.
They represent long-term commitments from the customer.
And we have quantitative evidence of this stability.
We do. The funded backlog hit a record $1.1 billion in the first quarter of fiscal year 2026. And the unfunded backlog, that's the long-term optional contracts, the IDIQs.
Indefinite delivery, indefinite quantity.
Right. That stands at $3.1 billion.
So that's $4.2 billion total, which provides the company with just unprecedented visibility into future cash flows. It minimizes that volatility risk immensely.
Exactly. And while the total revenue growth in Q1 FY 2026 was a staggering plus 140% year over year, largely driven by the BlueHalo acquisition, it is crucial to stress that the core legacy business, the UXS and LMS, excluding the acquisition, still grew organically at a very healthy double-digit rate of 16% year over year.
So the demand is structurally organic as well as acquisition-driven. That's a key point.
It is. The core is still very strong.
Okay, let's move to pillar number 3, the economic moat. We've established the business structure, but how durable is this competitive advantage? How well protected are those returns? We've characterized the moat as narrow but widening. Let's dissect the widening forces first.
The widening is driven by two massive forces that create defensibility. The first is what we call intangible assets, the battle-proven premium.
And in the defense industry, being combat-proven is not just marketing, is it? It is a rigorous high barrier to entry that is often non-negotiable for large-scale procurement.
It is the ultimate differentiator. The core moat is the proprietary performance data. We're talking millions of flight hours, thousands of engagement cycles, all accumulated specifically in high-intensity, GPS-denied, electronic warfare-rich conflict environments.
You can't simulate that.
You simply cannot replicate that stress environment in a laboratory. This data is invaluable.
This is what we call the Lindy effect in warfare. The longer a technology survives and proves its resilience in chaos, the longer its future expected lifespan and dominance becomes. And that data they're gathering, it's proprietary and constantly improving their core product.
It creates an essential self-reinforcing flywheel. Deployment generates combat data. That data is immediately used for hardening the system.
Like the Block 20 software updates.
Exactly, developed specifically against Russian electronic warfare tactics. This hardening then leads to higher procurement win rates in competitive programs, which in turn leads to more deployment.
And more data.
It's a continuous loop, and this proprietary battle-tested performance data is the secret sauce that trains their AI autonomy stack. It's a hidden, invaluable asset that their VC-backed competitors just don't possess at the same scale.
Okay, the second component of the widening moat relates back to switching costs, the cognitive lock-in. We've touched on the GCS standardization, but let's talk about the sheer infrastructure status AVAV now commands.
Right. The U.S. Army's sunk cost in training its personnel is one thing. The BlueHalo integration supercharges those switching costs.
No.
By moving AVAV from a device vendor to a critical infrastructure provider.
Explain that transition from device to infrastructure.
When you are providing the Space Force's satellite communication backbone, that SCAR program, or deploying directed energy counter-UAS laser systems across forward operating bases, you are providing mission-critical infrastructure.
It's part of the foundation now.
It is. Ripping out a foundational comms backbone or replacing a widely deployed CUAS system is an astronomical undertaking. It would involve massive operational disruption, retraining, system recertification. The switching costs are now in the tens of billions of dollars.
A whole different league.
A different lead entirely compared to just swapping out a basic drone platform.
Okay, now let's look at the Achilles heel, the counter moat. The pervasive threat of commoditization, which forces AVAV to run the Red Queen race. This is the single biggest threat to that premium valuation, isn't it?
It is. The Red Queen hypothesis, derived from Alice in Wonderland, is simple. You have to run as fast as you can just to stay in the same place relative to your competition. In defense, the competition isn't just other defense primes, it's rapid technological evolution. The existential threat is the fact that a $500 hobbyist FPV drone can destroy a multi-million-dollar asset in Ukraine.
And that fundamentally challenges the value proposition of a $60,000 Switchblade 300.
Absolutely. So AVAV's premium price point means they have to continuously justify that cost difference with performance, with security, and with survivability that those cheap COTS drones just cannot replicate.
So their moat depends entirely on their ability to outrun technological obsolescence.
That's it. They must continuously develop sophisticated anti-jamming, anti-spoofing, and encrypted communications capabilities that the supply chain for cheap COTS drones simply cannot afford or implement. If a major adversary develops an effective, widespread countermeasure,
say a highly efficient EW system that defeats the Switchblade's data link,
AVAV's technological superiority evaporates overnight.
And that need for differentiation is why the Switchblade 600 is so crucial to this whole story. It has to offer capabilities far beyond just range and payload.
It does. It offers a 40-plus kilometer range, encrypted comms, and most importantly, autonomous terminal guidance.
Okay, what does that mean in practice?
It means once the system is launched and operating in the general target area, it can navigate and engage the target without constant reliance on a human operator or potentially vulnerable GPS signals. That's a level of differentiation that a hobby drone simply cannot touch.
So how does this stratified competitive landscape look? I mean, who is the biggest direct threat to them right now?
Without a doubt, it's Anduril. They are the VC-backed defense tech firm that moves at Silicon Valley speed,
Right.
with systems like Roadrunner and Bolt competing directly in the loitering munitions space. Their software-first approach, known as Lattice, is essentially a direct competitor to the AV-Halo ecosystem vision.
So what's AVV's competitive edge against that kind of agility?
AV's advantage is manufacturing scale, a proven combat track record, and the established vast installed base and training lock-in within the DoD. Anduril's advantage is pure agility, speed, and a willingness to completely overhaul systems based on rapid feedback.
So it's a classic battle between incumbent scale and disruptive speed.
It really is.
And the regulatory moat still holds against the massive commercial players like DJI.
It does, thankfully for AVAV. The regulatory moat, specifically the NDAA ban for DoD use of certain foreign-sourced drones, prevents the Chinese commercial giant from directly competing in the primary U.S. and NATO markets.
That's said.
That said, DJI dominates the global commercial and global south markets, which sets a low price floor for basic drone technology. It always keeps that commoditization threat alive for the overall drone sector.
So the verdict on the moat is that the combination of regulatory barriers, the battle-proven flywheel, and this new complexity moat, the drone, plus the laser defense, plus the space comms, it makes their position highly defensible, but only provided they keep running that Red Queen race effectively.
Agreed. Which brings us right to pillar number 4, stewardship. We have to evaluate management competency and specifically the prudence of that $4.1 billion capital allocation decision. And we should note the extreme complexity of merging a private equity-backed roll-up like BlueHalo into AVAV's legacy public engineering structure.
Right, this $4.1 billion bet is the critical execution risk. Let's start with CEO Wahid Nawabi's track record. Has he earned the right to make such a big bet on the company's future?
I think he has. Nawadi has demonstrated strong strategic agility over the years. Critically, he showed immense discipline years ago by divesting the company's commercial electric vehicle charging business to focus entirely on core defense competencies. That's a good sign of a CEO who is willing to prune the portfolio when necessary, prioritizing core focus over just maximizing top-line growth at any cost.
And he's been extremely explicit about his goal, right? He wants to transform AVAV into a multi-billion-dollar defense technology company. He sees the current geopolitical tension, this shift from a peace dividend to great power competition, as a generational opportunity to reset the entire defense hierarchy.
But realizing that vision required the M&A aggressor strategy, it required the BlueHalo deal. And we can't sugarcoat this. This was a bet-the-company move.
Absolutely.
It was designed specifically to solve the scale problem and achieve immediate multi-domain prime contractor status, something that would have taken them maybe 10 years to do organically.
And crucially, this was an all-stock transaction. So why did they choose that currency, and what are the implications for current shareholders?
Well, the primary positive is that it preserved the company's fortress cash balance. They didn't take on massive debt that would restrict their future flexibility.
Okay, but the cost was?
Well, the cost was significant shareholder dilution. They issued approximately 18.5 million new shares. And the implied critique here is that they used highly priced stock as currency. For this to be a net positive long-term, the acquired asset, BlueHalo, must be strategically sound and, more importantly, highly accretive.
So if BlueHalo underperforms, the dilution destroys shareholder value.
That's the risk.
Let's check management alignment. Nawabi himself owns a substantial amount of shares, over 122,000 shares, valued at a significant amount. That's skin in the game, which is always reassuring.
It is a positive signal that his personal wealth is tied to the long-term success of the company. However, the data on insider transactions is a bit mixed.
How so?
We've seen a pattern of insider selling, for example, over 17,000 shares sold in July 2025, with a general lack of open market buying during price dips.
And what does that signal to you?
Well, executives sell for all sorts of reasons, like diversification, but the lack of buying suggests they don't see the stock as deeply undervalued, which is, a neutral to negative signal.
And we also have to examine the compensation risk. How are the executive incentives structured?
The compensation is tied largely to revenue and EBITDA growth. Now, this structure aligns perfectly with the aggressive M&A strategy, the desire for scale, but it introduces the risk of what analysts call empire building.
Meaning management might be incentivized to pursue large, risky acquisitions purely to grow revenue and EBITDA.
Potentially at the expense of shareholder value metrics like return on invested capital or ROIC, which might be overlooked if the focus is purely on top-line growth.
That leads directly to the single biggest stewardship challenge, which is the sheer integration risk. Given the complexity, this is where the entire investment could fail.
This is paramount. BlueHalo itself was a private equity roll-up of multiple disparate high-tech companies. Merging that multifaceted roll-up into the legacy AVAV engineering culture essentially doubled the employee count overnight.
So the risk of cultural fragmentation and brain drain is immense.
It is. The true value of BlueHalo lies in its highly specialized engineers and scientists in fields like RF, directed energy, and AI autonomy. If that talent walks out the door,
If the high-value employees find the new corporate structure too bureaucratic or too slow,
then the entire strategic rationale for the deal collapses.
and we have historical precedents here. Large defense M&A deals, like some of the struggles seen with L3 Harris's integration, they often suffer from indigestion. AVAV has to execute this integration flawlessly and rapidly to realize the synergies before any culture clash sets in.
Their ability to retain that high-value talent over the next 18 months will define the success or failure of this $4.1 billion bet.
Okay, now let's turn to pillar number 5, financial forensics, finding the quantitative truth amidst all this noise.
Noisy is the absolute right word. The current financials are extremely complex. You have acquisition accounting, amortization schedules, the ongoing shift in product mix.
Investors really need to look past the standard GAAP numbers to understand the economic reality of this company.
They do. But the first, undeniable takeaway is the revenue velocity. The top-line acceleration is just huge. Fiscal year 2026 guidance is projected between $1.90 and $2 billion.
Effectively doubling the size of the company immediately.
And we must emphasize the organic strength. Even excluding BlueHalo, the legacy AVAV business is still growing organically at a strong 16% year-over-year rate.
So that validates the underlying demand for loitering munitions and small UAS generally. It's not just an acquisition story, it's a structural demand story.
Exactly.
We mentioned the fundamental economic model shift earlier, but let's just reinforce why that LMS consumable model radically changes their financial profile.
Well, the transition from selling a durable good, like a Puma drone, to a high-velocity consumable, like a Switchblade, it creates a financial consumption cycle that's directly correlated with conflict intensity and military budget urgency.
So this consumption-driven revenue model drastically improved their long-term revenue velocity and consistency in demand.
Right, compared to the lumpy procurement cycles of the past.
Let's tackle the scariest quantitative issue for the casual investor. The massive drop in profitability and margins we saw in Q1 FY 2026, where gross margin just fell off a cliff. Why did that happen, and is it a structural concern for the business?
That margin drop from the high 40s down to 21% is almost entirely an accounting artifact.
An artifact.
Yes, it's predominantly due to the purchase accounting adjustments and specifically the non-cash amortization of intangibles related to the $4.1 billion BlueHalo deal.
So when you buy a company, you write up the value of its intellectual property, and then that value has to be amortized over its expected lifespan.
Exactly. So it's a non-cash paper expense that runs through the income statement, and it masks the true economic profitability of the combined entity's operations.
So investors must look at the adjusted reality.
They have to. Specifically, we must focus on adjusted EBITDA, which management forecasts to be between $300 and $320 million for FY 2026.
And what does that imply?
It implies a very healthy, economically relevant EBITDA margin of around 16% to 17%, which is exceptionally strong for a defense hardware and systems integration company. The economic margin profile is stable, even as the GAAP numbers look ugly.
Okay, now for the key weakness in the wonderful company thesis, and the most important metric that management absolutely must fix: return on invested capital, or ROIC.
This is the metric that currently trends negatively. It's appearing near 0.75% over the trailing 12 months, and it is the number that will determine whether this company becomes a value creator or a value destroyer long term.
So why is the ROIC so low right now? What's driving that?
The cause is simple acquisition math. The denominator in the ROIC calculation, which is invested capital, has ballooned.
Because of the goodwill and intangibles from the acquisitions.
Exactly, especially the $4.1 billion BlueHalo deal. When you pay a premium for growth assets, the accounting immediately penalizes your ROIC until those assets start generating massive cash flows.
So AV is in a deep capital deployment phase right now, not a capital harvesting phase.
Yeah.
How should investors reframe this in their minds?
They are essentially running an investment machine at the moment. For AVAV to become a true compounding machine, management must execute the identified synergies and growth necessary to prove that the economic ROIC
When you exclude those non-cash amortization items.
can eventually climb above its cost of capital. You can think of it like a massive private equity firm just took a company public right after a giant leveraged buyout. The accounting looks terrible initially because of the upfront investment cost, but the projected cash flow improvement is what really matters.
So until they prove that projected return, the wonderful company thesis is built on faith and execution.
A lot of faith, yes.
But let's balance that against the company's resilience, the balance sheet strength, which is especially crucial after they executed such a large merger.
Post-BlueHalo, the balance sheet is surprisingly robust and anti-fragile. They have about $725 million in debt. But thanks to the all-stock nature of the BlueHalo deal and strong cash generation from the core business, they maintain a similar cash position.
Resulting in what?
Resulting in a negligible net debt position of roughly $40 million.
That is immense financial flexibility.
It is a fortress balance sheet. The decision to use stock instead of debt preserved that cash balance, and it provides immense resilience against future operational stumbles, unexpected inventory write-downs, or, critically, rising interest rates. That financial flexibility is a major component of its anti-fragility, and it insulates them from those integration risks we talked about.
Okay, we've covered the technical, strategic, and financial transformation. Now let's talk about the elephant in the room. Valuation. Pillar number 6. Is this company simply priced for perfection?
Well, the market has certainly decided to treat AeroVironment as a high-growth technology stock, not a slow-moving traditional defense industrial. That's why it commands such a profound premium.
Let's put some numbers on that premium so listeners understand the expectation that's baked into the share price.
Okay, based on their current enterprise value of around $14 billion and the adjusted EBITDA guidance of about $310 million, AVAV is trading at approximately 45 times forward EBITDA.
45 times.
And their price-to-sales ratio is around 6x to 7x pro forma sales.
That is a staggering premium. I mean, if we contrast that with the traditional defense primes like Lockheed Martin or Northrop Grumman, they're trading at maybe 15 to 18 times earnings and sometimes 1.5 to 2 times sales.
The difference is stark. AVAV is priced closer to high-growth, pure-play defense tech firms. Think of the private valuations for Anduril or the public valuation of Palantir. This 45x multiple implies the market expects continuous, rapid hypergrowth.
Like 20–30% organic growth.
For the better part of the next decade.
So if the investor is looking for deep value, they will not find it here. The investment decision really boils down to one critical belief: the consumable warfare thesis.
Absolutely. The price is reasonable only if you believe the Switchblade family will become the standard issue infantry weapon for NATO and other U.S. allies, the M16 of the 21st century.
And if it achieves that status?
If it achieves that status, establishing an endemic, persistent demand floor, then the current valuation will look cheap 5 years from now. If it remains a niche specialty tool, the stock is profoundly overvalued.
And the Replicator initiative strongly suggests that DoD is committed to that M16 scenario.
It does. It's a strong signal.
Now, let's flip the thesis on its head. This is the most critical exercise for a disciplined, long-term investor. How does this investment fail?
We need to define the failure modes clearly. Risk number 1, integration and indigestion. The $4.1 billion bet falling flat.
And what does that look like on the ground? What are the warning signs?
It means failure to realize the identified synergies. They've budgeted about $20 million in administrative cost savings. Or, catastrophically, a severe cultural brain drain post-BlueHalo. If the high-value engineers who built the laser systems and phased array antennas feel alienated and leave, the strategic rationale for the deal is destroyed, and the stock dilution becomes permanent value destruction.
Okay, risk number 2. Technological obsolescence, which is the ultimate Red Queen threat.
The battlefield's electronic warfare capabilities are evolving faster than almost anything else. If Russian or Chinese EW systems figure out how to consistently render the Switchblade's encrypted data link ineffective, and AVAV can't update its autonomy stack fast enough,
Or if a cheaper, more survivable technology emerges that's better suited for mass production.
then AVAV's technological superiority becomes worthless, and their inventory is obsolete. The early jamming issues reported with the Switchblade 300 in Ukraine are a serious early warning sign that this race is real and it is relentless.
Risk number 3 is geopolitical cooling, the peace dividend risk.
Right. The current revenue growth and market sentiment are heavily fueled by this urgency premium driven by the war in Ukraine and the heightened tensions in the Indo-Pacific. And while the strategic pivot toward China provides a long-term demand floor, a sudden comprehensive cessation of hostilities in Ukraine or a rapid de-escalation with China would remove that urgency premium instantly.
And in that scenario, the market would re-rate AVAV from a 45i EBITDA growth stock back toward a more traditional 20x defense multiple.
Leading to rapid, painful compression of that multiple.
Finally, risk number 4, supply chain fragility.
Ramping up production to a $2 billion revenue run rate requires absolutely flawless execution on the supply chain. The company has faced constraints in the past regarding specific chips, specialized optics, or batteries.
Components often sourced from complex, high-volume Asian supply chains.
And doubling throughput means doubling these vulnerabilities. A small hiccup here could delay a critical program of record deliveries, leading to financial penalties and a loss of customer trust.
Okay, lot to consider.
So let's wrap this up with the overall verdict. For me, AeroVironment is a developing, wonderful company, an anti-fragile growth aggressor. They have successfully navigated that perilous transition from gadget maker to defense prime.
It's no longer just a drone company.
Not at all. It is the single must-own asset for investors seeking exposure to the convergence of autonomy, space, and lethality in modern defense.
The core tension for investors is clear then. You have high business quality, a widening complexity moat, and clear top-line growth, all balanced against its immense integration execution risk and a demanding valuation that is, priced for perfection.
The path to $3 billion or even $4 billion in revenue by 2028-2029 is discernible. But the execution needs to be absolutely flawless at every step to justify the current premium. They have embedded themselves into the future of conflict architecture. The question is whether management can prove their ability to efficiently compound that capital base.
And that leads to our final provocative thought for you, the listener, as you evaluate this investment. The BlueHalo acquisition didn't just add directed energy. It embedded AVAV into the U.S. Space Force budget through that critical SCAR program. Since the Space Force is currently the fastest-growing department within the DoD, consider the long-term implication. Does AVAV's successful diversification into the high ground of space communications and CUAS laser defense make it structurally more resilient to the inevitable technological commoditization of its core drone business than the market currently appreciates?
That's a great question.
This move into infrastructure might be the ultimate hedge against the Red Queen. That is something worth mulling over when you consider the next 5 years.
Absolutely. Thank you for joining us for this deep dive into AeroVironment. We'll see you next time.
Take care.